Well, that was the day so far. Hello and welcome to Closing Bell. I'm Nigel. With me is Surbi, and another day and another afternoon where the markets are unable to hold at higher levels. We're down a little bit, down 50 points. One would say it's par for the course after the kind of selling that we've seen in the last few days. The bright spot, though, is the private sector banks. Banking names, they're still up, and that's why the Nifty bank is up close to 300 points. Hey, Surbi.
Hi, Nigel. Yeah, I mean, actually, there's some PSU action as well that we'll get to in just a bit. But it would be a little disappointing for the bulls because, today, actually, if you look at cues across some of the Asian markets and even how Europe is trading right now, there's a lot of green in some of those screens. So Wall Street was down, yes, but a lot of the markets have shrugged that off. They've done their own thing. Europe is right now rallying between about 0.5% to almost, 0.75%, depending on which market you're looking at. And you've had a positive close in some of the Asian indices as well. Yeah, that's what I was talking about. But none of this is kind of helping our cause. It continues to be a market which is seeing some very, very sharp result reactions, and there is a mid-cap sell-off that is underway as well. When I say sharp result reactions, I mean, obviously, lever is the big headline of the day, and we'll talk about that as we go forward. But on the broader screen, just to highlight, I mean, how severe earnings moves can be on either direction, let's actually start off with the casualties of the day. KPIT Tech, we spoke with the company in the morning. That stock is being slammed almost 13-14% right now. Dr. Lal, we again spoke to this company as well, 7% down. And VIP is a different story altogether with the losses really, piling up this quarter. But let's not be very pessimistic because wherever numbers have managed to sort of meet expectations or beat expectations, there are outsized reactions there as well. Care would be a case in point. Care, I mean, with the margin moving to almost 47-48% this quarter, stocks on 20% upper circuit. And look at Aster DM, Piramal Pharma, some interest over there. And Nigel was talking about the private sector names, even PSUs. Interestingly, in a market like this, there's a little bit of green on PSU names like the ones that you're seeing on your screen. But that's on the stock specific level. For the market as a whole, Nigel, I think the worries still seem to be continuing.
Well, indeed, the headline index, but I think, should be 20, 50, 80 points cut, you'll take it. We had a couple of sessions where we fell 1% in a single trading session and we went up nicely, but from there, actually, we've lost close to 7% from the highs. And, one sector I think that the street is at least giving the benefit of the doubt and looking ahead is the cement sector. Ultratech's numbers are disappointing. The stock is higher from the time it delivered its numbers, in comparison to the low that it made post that. So that's higher in trade. Dalmia Bharat, well, that stock also is higher, in comparison to what we saw on a Monday morning. They came out with the serve numbers over the weekend. The stock went down, I think, to around 1,760 odd. And from there, it's bounced back because the positioning was such. And now the street is hoping second half of the year will be better. Birla Corp came out with its set of numbers yesterday. And that one as well, the numbers were disappointing. But the street was prepared for those numbers. So that's why that as well is higher. And Sagar Cement as well was a disappointing set of numbers. But that one as well is higher in trades. Short point I'm trying to make is, on these cement names, it seems the street is willing to look ahead, give them a bit of a long handle, and hope that they deliver in the second half of the year. Well, let's get in Mitesh Thakkar, who joins us to help us out with the trading action. Mitesh, those bounces are getting sold into. We're down 40 points. I wouldn't say that's such a bad thing after, the kind of selling we've seen in the last few sessions. We have a weekly expiry that will play out in 60 minutes. How would you trade the Nifty and the Nifty Bank?
So, I think, good afternoon, Nigel. It's the Nifty Bank, which is kind of keeping the Nifty afloat as well and above the support levels of 24, 350, 360. So, broadly, I think that's where the focus should be. I, in fact, have a Bank of Baroda as a buying or alongside recommendation. Keep a stop at 239. Look for a target of roughly around 255 to about 258 over here on the upside. But the rest of the market, to me, looks weak. Though I think there are individual stocks which are bouncing back. I think broadly it's a market which is slightly driven on the negative side. So a sell on ABB can be taken vis-a-vis that, and keep a stop at about 77.20 here. Look for targets of around 74.30.
Okay. All right. Mitesh, got that. Thanks very much. We'll come back to you with some more sort of questions as we go forward. Let's start looking at all the stock-specific action that we're getting today. And one interesting stock has been IIFL Finance. It started with, quite a cut, almost, 4-5% down at the word go. But look at the recovery because the stock is now in positive territory, almost 1.5% higher. So clearly the company seems to be, or the street seems to be betting on the worst being behind the company. There was a conference call that happened. So let's go across to Abhishek and get a sense of the highlights. Abhishek?
Well, in the con call, IIFL Finance management did augur well with respect to positive commentary, especially on the gold financing business. So they say that they are back on gold financing very strongly after the RBI lifting of the curve that had been imposed on them. So customer loyalty is also very heartwarming and satisfying. Now, gold loan was around 10,000 crore for them when the embargo was lifted. It's now already at 12,000 crore with respect to the AUM over there. So they expect the pre-ban momentum, which they had about 30-40% kind of a growth rate, to come back by the end of March quarter with respect to gold financing for them. So they expect liquidity to improve for the company, and they'll be able to grow the book at a very good pace as well. The environment is very good for them, as well as MSME and affordable housing is another area of focus that they are having, which will pick up momentum as well over there. So they say that demand is picking up even as the interest rate is on the higher side, but the interest rate is now peaking out. So microfinance business has been passing through tough times, which is seen across the industry that MFI portfolio is under stress. They say that they'll try not to have more than 4 loans per customer. So over leveraging is a concern in the entire MFI space, wherein 6 to 8 loans are given to the same customer. So they expect MFI to continue to see deterioration in asset quality over the next 2 quarters, that is Q3 as well as Q4. And they have said that recoveries from AIF investment will take about 2 to 3 years. Back to you.
Okay, all right. Got it, Abhishek. Thanks very much for that. So let's get the conversation going. We have Deven Choksi joining in on the show today. Deven, good to have you on. It's very, very granular, company specific. Since we were on the subject of IIFL Finance, let's get your thoughts in. Do you also think that these lower levels are a good entry point and that now most of the regulatory issues are behind them?
Yeah, good afternoon, Survi. Well, I certainly believe that I think the gold loan related business, which was a mainstay for the company for a long period of time, I think is coming back with the regulatory embargo lifted. So definitely in subsequent quarters, we are likely to see a relatively better performance coming on that particular vertical side. However, I think the write-off on the AI front, and particularly I think the recovery period, which it is being taken into account, I think that another 2 years or so, I think the balance sheet will remain a little bit struggling as I see it at this point of time. Maybe I think no specific view on this particular stock, largely also due to the fact that we don't have it under full coverage. So whatever the outside observation that we have, I think I just present it across to you.
Okay, fair point. That's IIFL Finance hope building on the gold loan business recovery, which is quite critical to that particular company. By the way, the big story of the day obviously has been the debate around the consumption slowdown. And in a bit, we'll get Mangalam to join in as well on a lot of the commentary that has poured in. And it's more of the same, really. A lot of companies are talking about how, while rural demand seems to be picking up, there's pressure coming in from the urban side right now. And the question is this only a sort of a seasonal issue, 1 quarter off, or is this a bigger concern in the making? Colgate's numbers came a while back, by the way. And the first cut that we have is that, that margin pressure, that's quite telling. Margins are well below the pole, which is why you're seeing, a downside move on the stock as well, 3% lower. The margin came in at 30.7%. The expectation was that it's going to be around 33%. So the street was working with margin expansion. What Colgate has delivered is actually a margin decline. Not just that, if you look at the revenue number is fine. That's actually absolutely in line with estimates. Profitability is also okay. It's about the EBITDA line and the margin for Colgate, which is why we're seeing a bit of a negative reaction. Deven will obviously address lever, which is a big story of the day. But any thoughts on Colgate before that?
Well, I think we'll have to look into the specific about the fall in the margin. I think that is for sure. Maybe I think as I understood from some of the commentaries, I think which we have heard from the management, not specifically linked to Colgate, of course. There is an inventory which is basically, I think, causing a problem, wherein I think the high cost of the inventory and the lower realization in the market due to the competitive pressures, I think has created a double whammy effect in the books of many of the FMCG companies. In my viewpoint, I think this is getting cleared in the second quarter result that we are seeing. What we believe, I think, again, I think relying on the commentary, I think, which is coming from the companies, that in the third quarter and the fourth quarter, there is a clear symptoms wherein I think the demand growth is taking place. In fact, I think starting October itself, I think many companies have been dispatching higher number of volumes to their franchisees, their distribution points. If that is holding true for the rest of the quarter as well, then whatever the fall that one has seen in the second quarter could possibly come back in the third quarter. And with relatively stable margin compared to what one has seen in the second quarter, one could possibly argue that I think the temporary effect of second quarter may not be lasting. And probably I think you could be seeing the third and the fourth quarter remaining relatively more positive compared to the second quarter in this financial year.
That's about Colgate, but let's focus on the big one, HUL. The numbers for the second quarter were a slight miss from street estimates. Net profit was lower. Mangalam joins us to fill us in with a quick analysis. Mangalam?
Well, HUL is the top nifty loser in today's trading session, and that's largely on account of three factors. The first one was the results were slightly shy of expectations. Anyway you cut it, the revenues slightly shy of street expectations at 15,500 crores, volumes coming in at 3% versus expectations of 4 to 5%, and that trickled all the way down to the EBITDA and the net profit as well. Even if you look at the segments, while there was notable outperformance from home care and beauty and wellness, personal care actually deteriorated by 5% in terms of revenues, and food and refreshments declined by about 2% as well on account of macro weakness in the tea business. The second reason that the stock is under pressure is because of an explicit call out in terms of urban weakness coming in from the management. They have said that even as there is gradual recovery in rural, urban growth has seen some moderation, and this, remember, accounts for nearly 2/3 of their revenue itself. There is raw material inflation which is going to inch up, and as a result of which they expect low single-digit price growth. Could that have an impact on the volumes or not is something that the street is still divided on. Important to look at the EBITDA margins as well. At current levels, the management believes that they will sustain going forward. And the third big reason, brokerages, not very perturbed by some of the positive statements that have come in itself, and they are actually cutting their EPS estimate. So JP Morgan has cut their EPS estimate by about 3% on the back of marginal moderation in revenue forecasts. So they've cut their target price to 28.70 as well. Morgan Stanley has an underweight call on the stock, and Jefferies too has a buy call, but they have a target price of 31.30 on the stock.
Thanks for that, Mangalam. Deven, what's your view on HUL?
Well, I believe that I think these companies are valued at such level that the market is expecting a very high growth from these companies. And that's where probably I think there is a disappointment happening on the stock price front. Though I agree on one aspect, which I explained earlier also, that the second quarter is not the reflection of the full year going to be. And the third and fourth quarter definitely is having a better outlook, as can be understood from the commentary of the management. I believe that I think it is currently the valuations at which I think investors would find it uncomfortable themselves with this kind of businesses. Because one side, I think growth is tapered down. On the other side, valuations are lofty. If this mismatch is not getting corrected with the price correction, with the time correction, then possibly I think you are going to see a drag on the stock price. And that's what we are experiencing in even better names like HUL. You are likely to see the similar kind of outcome in many of the FMCG companies, because on one side they've been carrying the inventory, which is of a higher cost, and on the other side, the pressure on the margins because of the selling at a competitive price in this particular quarter. I guess I think if you pass this particular quarter, maybe the third, fourth quarter could be relatively better than the second quarter as I see it.
Okay, all right, Deven. In fact, let's stay with the theme. FMCG majors have highlighted a slowdown in demand. The managements of HUL, Nestle, Tata Consumer, Pidilite, all of them point to pain in urban markets, while rural is seeing some kind of a gradual recovery. Let's listen in.
The rural markets have been on the recovery path for some time and continue to recover gradually. And please note that it's about a third of our business comes from rural areas and 2/3 comes from urban areas. In the recent near term, we have seen a certain slowdown in the urban markets. They are continuing to grow, but the growth rate is trending down. And on the whole, therefore, the markets are slightly down compared to where they were, say, a few quarters back. Now, it's a near-term phenomenon, and it could be driven by various macro factors that could be short-term and long-term in nature.
I do think once the entire Kharif, this thing happens, you will see a far more buoyant rural economy. That said, on the urban pace, I wouldn't say that much, but there has been an impact of all the flooding, etc., in various parts of the country. B, food inflation. I think we have not, I would say, seen the full impact. For the middle income person, I mean, food inflation is a reality, and I think that has bitten up hit a bit. So across various categories, if you see, four-wheelers are slowing down. Other competitive FMCG companies are talking about stress in urban. So you look at various indicators, all of them are indicating a little bit of stress.
So I think this question will really be best answered in January to see, listen, is are demand conditions really subdued as a result of external factors, or is there an issue with consumers? I mean, we know that rural markets have been subdued. I mean, it's simple mathematics. In over 3 years, if you look at rural incomes versus rural inflation, there is less money in the hands of the rural consumer. I mean, that's an obvious fact, and only companies that have therefore substantially invested and have a penetration opportunity like ours have done well in rural India.
Well, speaking to the media, Nestle's chairman and managing director Suresh Narayan also said that the FMCG sector is witnessing a slowdown in demand as middle class shrinks. However, he also pointed out that demand for premium products remained high. The Nestle MD also said that the demand pressure points were coming from mega cities and metros, and noted that as opposed to earlier demand slowdowns, which used to last for a quarter, the current slowdown in demand has lasted for 2 to around 3 quarters. He also added that the bigger cities were seeing a challenge or a change in consumer behavior, with people preferring quick commerce and e-commerce options. All right, Mangalam still with us to recap the commentary on the subdued demand from the FMCG companies. Mangalam?
Well, absolutely. Urban demand coming under pressure is one of those concerns that across the board, a lot of these FMCG leaders have called out. And that's important largely because 2/3 of revenue for the FMCG sector comes in from urban India, and 1/3 of volumes comes in from there as well. We've just about seen gradual pickup in rural, and in light of that, urban not doing well may not bode well for the growth of all these FMCG companies. Case in point, Nestle's Suresh Narayan did say that shrinking middle class has impacted FMCG sales. We saw a challenging demand environment in the quarter that went by as well, largely on account of muted consumer sentiment. Tata Consumer Sunil D'Souza called out that as well, saying that FMCG companies' sales have indicated urban slowdown, and urban has had some impact on flooding and food inflation coming in because of the excess rains that happened during the quarter too. They expect government spending to ramp up and then aid urban demand too. HUL has spoken about moderating urban growth even as there is gradual recovery in rural, and urban slowdown, though they've called out as a temporary phenomenon. Pidilite has said that demand has been impacted in the beginning of this quarter because of excessive rains. First half was impacted by one-offs like elections and some flooding as well. It'll take them some time, at least a quarter, to find out whether there is weakness in consumer sentiment or it was largely because of external challenges itself. United Spirits, their prestige and above volumes also fell by 4%. They cited muted or softer than expected demand environment in consumer sentiment this time around, as a result of which they have seen that decline in their volumes. And Asian Paints too, in a conversation with us, the management had said that the second quarter has been impacted by both monsoons as well as flooding in parts of the country. The question that remains to be answered, is this just a one-off or is this something structural where we are seeing for the next few?
Thanks a lot for that, Mangalam. Well, by the way, those are visuals, of that big show that we are having later today. In the next 20 minutes or so, we have Mr. Ramdev, who has arrived with his fund manager as well, who takes care of the large cap names. So we'll get to that in just a bit, but that's footage of all the big guests coming in there. We have Ramdev, we'll have S. Naren that will be joining in, Nilesh Shah and Navneet Munuth, all of them will be joining in. So we'll get to that in just a bit. But in the meanwhile, let me introduce my co-anchor. Sonal joins me in the studio. Well, Sonal, it's that sort of a day, right? Markets a little bit lower. The banks are a bright spot, and otherwise plenty of action in the broader markets.
So much action. We have so much to talk about, and earnings are coming in thick and fast.
Indeed.
It's a busy, busy day,
Absolutely.
a busy week for all of us. And we've been talking about earnings all through the day. In fact, earnings, let's talk about that with Deven Choksi. He's joining us back again. Deven, chemical space, we got the numbers from SRF, we got the numbers coming in from Naveen Fluorine. Divergent views from the management in terms of guidance. We saw Naveen saying that, yes, there's still something which is left in terms of growth in second half. The SRF did say that, but they did not give a proper guidance, which they always do. What did you make of the numbers so far from the chemical space? Do you think this would be a space to look at now that everyone's talking about recovery in the second half?
Yes, Sonal, I think this one should be looked at favorably. couple of reasons. On one side, I think the business outlook and the conditions remain improved. On the other side, I think at the current cost level, the input cost is under control, has come down compared to what it was in the previous years, in last 2 years in particular. And I think in the last quarter, if we analyze properly, I think more or less, I think it is a pain because of the high cost of inventory which had carried into the balance sheet, which has got cleared probably in this quarter, and maybe something is left out for the third quarter. But should we assume that this particular inventory is getting cleared out in the third quarter? Maybe third quarter and fourth quarter could be relatively better quarters of earnings for these companies, particularly likes of SRF, where the fundamental holds, I think, larger promises. So from that perspective, one wants to look at it. Let's get the validation in the third quarter about the result, and that clears the view on the high cost inventory and the better growth. We do see the prospects of better dispatches now in the current year, as confirmed by many of the companies. So certainly, I think there is going to be a little bit more positivity than I think whatever has seen in the previous quarters, as far as the third and the fourth quarter in the financial is concerned.
Got it. Deven, the sector actually that has recovered big time from the lows of the day, and the street is willing to look at the second half of this fiscal year, is the cement stocks. Just take a look at them go. Whether it's Ultratech, whether it's ACC as well that came out with its set of numbers, all of them, even a Sagar Cement that delivered very weak set of numbers. The point is that even Ultratech had already seen a 10% correction. If you look at it, I think somewhere from September 20th or 25th, the stock was at more than 12,000 rupees. On the day of the results, it went down to around 10,600 rupees. So it already saw a 10% correction getting into its numbers. And that's why now the street posts that commentary. They believe that maybe we can give them the benefit of the doubt. Deven, what's your view? Second half of the year is normally good. We have a state election of Maharashtra as well that will take place. Input costs have cooled down, and the hope is pricing will improve. Your view on cement?
Yes, Nigel. I think second half, we should be seeing higher amount of dispatches, I think, from particularly the pan-India players who are basically supplying to the larger projects, who are basically supplying to the cement mix for the purpose of, I think, the larger projects, including in infrastructure. So from their side, I think the volume growth in the second half is certainly going to be on the higher side. That is what we are finding. On the other side, the likes of Ambuja, they are relatively better off also because of the fact that their fuel mix, the energy cost, I think, is expected to come down. Also because of the fact that the renewables are now ticking in, and I think a part of the blended energy cost is coming down for them. At the same time, I think superior logistic management cost is also helping them out. And I think I would believe that I think they would have, because of the bulk supply ability, would have slightly better edge compared to others, I think, as far as the pricing power is concerned. So all in all put together, the margins are likely to see relatively better numbers in subsequent quarters, along with the volume of tech. So if I think the last quarter has been disappointing for reasons because of the monsoon factor also, I think in the third and fourth quarter, we are likely to see the better numbers, including in the first quarter of the next financial year. One should be seeing, I think, a significantly large or better numbers, particularly from the large cement companies who are having the capacity to deliver.
Okay. All right, Deven, thank you so much for joining us today with all your thoughts and individual names and sectors as well. We'll be speaking to you with you very soon again. But it's time now for our special segment, D-Street Chatter. Nimesh will get us an insight into dealing room chatter, as well as few tidbits about the stocks that are up and about in trade. Nimesh, what do you have for us today?
Hi, Sonal. Again, a bit of under pressure, largely on the back of disappointing earnings. So it's basically, India underperforming, largely on the back of disappointing Q2, and across sectors and across companies, you're seeing a bit of disappointment as far as the earnings are concerned, and that's showing up in the numbers as well. Even the flows are not very supportive. So we've been saying for the last 1 week now that there's been aggressive selling, so that continues. Even in today's market, the buy-sell ratio is close to 1:2 on the sell side. And for the last couple of days, the data seems to suggest that there is an aggressive selling from some long-only funds, and that too in the large-cap names. So that's the reason why we're seeing a lot of pressure in the broader market stocks as well as in the large caps. The sector of the day is clearly FMCG. The hope was that at least this is one sector which will deliver strong numbers. It was part of my Q2 preview as well, that FMCG and consumer basket are expected to deliver strong, and that's not been the case. And I'm seeing a very sharp reaction to those names in today's market. So again, the earning reaction is pretty sharp in the disappointing set of numbers. The only space which is seeing a bit of buying traction back is the financials, and within that, private sector bank stands out. Selectively, there is buying into PSU banks as well. So the PSU bank index is up nearly 1%, and some bit of buying has emerged there as well. But broadly, I guess it's an earning disappointment which is dragging the markets down, and the FI selling continues, at least in the large cap names.
Okay, all right. Nimesh, any stocks that you have for us?
Well, it's a challenging market to identify individual buzzers, but still I've managed to figure out few. The first name is Himmat Singha Seed. That stock is up 10% and large volumes as well. It's been buzzing in trade today. I understand the company is very close to raising funds via QIP, and some marquee investors are likely to put in money. That's the reason why that stock is exciting in trade today. The second name is NTPC. As I said, there is a lot of long-only selling happening, and NTPC stands out on the sell side. So aggressive selling for the last couple of days. The deliveries marking is on the higher side, and that's because some long-only funds are active sellers there. And the third name is Hindalco. That's interesting. We saw a very sharp correction in the early trade, almost down. The stock was on 7%. We've seen a bit of an intraday recovery, largely on back of some bit of buying interest from larger HNIs. So looks like some few large HNIs have bought in today's weakness, and hence that stock has seen a bit of a recovery intraday.
Okay, all right, Nimesh, thanks a lot for that. Well, in terms of stock moves, I think just one stock I want to highlight is Reliance. That went to the 2,650 odd mark. For the recent past, it's going to 2,600, 2,650, but it's finding buyers out there, and that's been underperforming for the last few months. So it's good to see the big boy is participating, and that coupled with HDFC Bank, well, that's more than 20% of the Nifty. If they can stand tall, that'll definitely help the bulls as of now as well. HDFC Bank up 0.8%. Well, moving to small programming note then as we slip into a short break. As we prepare to ring in the festivity, is this Diwali? Tune into CNBC-TV18's Market Movers Forum. Today at 3 p.m., that's in the next 15 minutes or so, we'll have our guests who will be joining in, Ramdev Agarwal, S. Narain, Nilesh Shah, and Navneet Munurth. They will be focusing on helping your portfolio prosper this Diwali.
Welcome back. You're still tuned into Closing Bell. Well, one space which is reacting to earnings, surging. Most of these stocks are surging in trade. It's the pharma space. Post the quarter two earnings, Winnie's joining us with the key highlights coming in from Piramal Pharma, Strides Pharma and Aster DM. Winnie, what did the numbers look like?
So really, we're seeing a very good performance coming in from all these three companies. And let's start with Piramal Pharma. Look at the stock up move almost. At one point of time, intraday, it was up 19%. So, strong gains coming in for the stock. Why? Because the growth in the CDMO business, which accounts to more than 50% of the sales, has seen a very strong performance. They've seen stable margins, improved margins on a quarter-on-quarter basis, a sharp improvement in terms of margins. And the company has highlighted that the Biosecure Act plus the funding for biotech, that has started seeing an improvement. And those will be the key triggers that will drive the growth for their main business, the CDMO business. So that is why we're seeing a good up move coming in for Piramal Pharma. Aster DM, good set of numbers, beating the street estimates. EBITDA margins of 20% versus just around 15.6%. So, 500 basis point expansion in terms of margins on a year-on-year basis is quite strong. Hospital business, that's driving the growth for the company. That's the core business for Aster DM. And hospitals and clinics, that saw growth of around 19% this time, strong margins of 24%. And that's expected to be a driver for the company going forward. Strides Pharma too, a good set of numbers reported by the company, 20% growth, led by the US business for the company, to where it saw growth of 26%, which accounts to 51% of their revenue. Other than that, they're expecting strong growth in the second half of the year as well. Margins expected to see an uptrend in FY25. So yes, positive outlook for all these companies.
Okay. All right, Vinny, thanks a lot for that. Well, let's welcome our next guest. We have Mithun Ashwath, Managing Partner at Kiva Advisors, who joins us on the show. Hi, Mithun. Good afternoon and good to see you, Vin. Well, earnings season clearly has been very, very muted. And coupled with that, suddenly there is this optimism about China after a couple of years, actually, that they're going to do something to kickstart the economy. And that could probably be the reason that these FIs are selling. How would you approach market as of now? React to the muted earnings and the way ahead?
Yeah, hi. Afternoon, Nigel. I think, our markets obviously have corrected from the recent highs, primarily on, first on account of those FI selling. And then we've seen a little bit of, tepid earnings so far. I think Q2 was expected to be a little bit muted, but we came into Q2 when markets were a little bit high. And so, we are seeing the reactions, which are quite vicious on either side. When earnings beats are also there, the moves are quite sharp. So I think there is going to be volatility in the next couple of weeks. We're going to see even the US elections as well. And there the verdict either way could impact even global markets, because one of the incumbents talks about raising taxes, while the other one is talking about cutting corporate taxes. Having said all that, on the domestic level, I think one needs to just look at valuations. And whenever valuations do come to an interesting point, though near-term earnings look a little disappointing, one may want to start taking positions because we've had a good monsoon. And if Q3 starts, improving, then, stock prices which have fallen can recover. I think there is a fear in the market that this could be a slightly extended period of a slowdown. But we still don't have, confirmation of that.
Okay, all right. So that's about the market move. Anything in the markets which you think is now a good entry point, Mithun, or anything that stood out for you in earnings so far? I know we are still in the middle of the earnings season, but anything that you liked?
Yeah, I think, in the earnings season, more than the earnings season, I think where are expectations low and where do you see potential improvement? I think, the cement sector is one space where, we've seen, lackluster a couple of quarters. But commentary seems to indicate that Q3 and Q4 should be better. So, pockets within that space could present an opportunity. I think, your entry points into stocks will be very important here because even where, earnings growth has been very good, stocks are priced to perfection. So any disappointment in the subsequent quarters could, hit you quite badly.
Mithun, do you have a view on the real estate space? If you look at the index, forget about individual stocks, the index is up 45-50% from last Diwali to this Diwali. So it's been a very happy Diwali for them. Any view on the real estate space? Would you play the core real estate companies, maybe the financiers or some of those ancillaries?
Yeah, Nigel, I think to play, real estate now, some of the stocks have, given you handsome gains. And we've seen a little bit of tepid demand in the last quarter. But individual companies are different because they have launches in the first half and the second half. But it is a little bit more of a tricky space. I think some parts of the real estate, ancillaries have kind of underperformed. And those could be areas where you would want to potentially look at, be it, sanitary ware or, tiles or on the plywood space. These are spaces where, you may have more secularity of growth, and the current weakness could potentially be good to accumulate.
Okay. Mithun also wanted your take on the auto space, because we had that commentary coming in from Bajaj Auto, the stock fell, especially the two-wheeler space, of course. TVS Motors also, the stock fell after numbers yesterday. There was some margin pressure. How do you play the auto theme? Is it via auto anchors? Is it the OEMs? And are valuations now looking stretched here?
Yeah, I think auto from, a complete decline post-COVID, and the recovery has been very sharp. But stocks have also moved ahead of time, and some of these are trading expensive to historical valuations, and hence any small disappointment or outlook or perception of a slowdown in terms of outlook, especially on the two-wheelers, we saw stocks correct. So I think the re-rating has happened. From here, I think you will get earnings growth at best. There are a couple of, there is one two-wheeler company which does not really cater to the consumer, the commuter segment, and plays more the higher end. That we continue to be positive on because it has still a small market of the overall two-wheeler market. So, you'll have to pick and choose within the space. I don't think it is as easy as it was maybe a year and a half ago.
Mithun, what about this electronics manufacturing space? That provides you with a long runway, right? There's a big opportunity out there. So you'll have these knee-jerk reactions. In spite of this big opportunity, some of these stocks have already factored in part of the good news. So how do you approach that space, and what do you like?
Yeah, I think, the two large listed ones have, performed very, very well. And that's, again, considering the current market environment, it can be susceptible to disappointment because right now you are pricing in the growth. If in the near term growth does not come in or execution does not match the growth expectation, you could see again, some of these correct. We've seen that maybe a couple of years ago, and then they rebounded. I think you'd rather pick ones which are more diversified in terms of product range, not only an AC manufacturer, but having 3 or 4 legs to the business, which gives it more of a durability and secularity. Otherwise, it's going to be a little volatile there.
All right. We have Adani Total Gas's number at the bottom of your screen. The stock is surged 6%. The net profit is up 7.5% on a YOY basis. It's looked like a good, decent set so far. Of course, we have to look at the quarter-on-quarter numbers as well for this. But do remember, this quarter we did see higher gas costs come by, and that could continue now because of lower APM gas allocation in Q3. But the stock on decent set of numbers that the company has seen this time around has surged just up around 6%. In fact, there's Laurus Labs as well. The net profit has come in at 20 crore rupees. This compares with a poll of 46 crore rupees. And this has been the case with Laurus Labs. It has, in last couple of quarters, disappointed versus with what the street has been working with. So far, we have the net profit number. The stock has come off from the highs, is at the day's low. We'll have to see what the geographical breakup has looked like, the ARV segment, how has that performed this time, because that has been under pressure in last couple of quarters. So the margin number will be very important to track in both the segments, the ARV and the non-ARV segments as well. And we'll get in Winnie as well to tell us how the numbers looked. For now, it looks like a big miss. The revenue is largely in line with estimates at 1,224 crore rupees, compares with a poll of 1,287 crore rupees. It's a big miss on the net profit, and that is something that we'll look at properly, Nigel.
Well, indeed. Let's get Mithun's view. Mithun, how do you approach some of these pharma names? Some of them are doing very, very well. I think as a sector, it's very difficult to look at it because you'll have to look at stock-specific action. Laurus, for the last many quarters, they are talking about the margins will recover the next or the next or the next, or maybe sometime in FY26. We know there is a potential. We know at some point in time the delivery will come. But I think for the last many quarters, the stock is in this range only because those numbers are not really coming about. And the EBITDA number is much lower yet again.
Yeah, I think, it's quite difficult to predict in some of these companies. You'd rather play, in pharma, a company which has both maybe a domestic business as well as an export business, or just pure play domestic pharma businesses also have done well. And they are more secular in nature. I think that could be a space that one can look at. Even in the recent past, you've seen, the diagnostic companies, after doing very well in COVID, then went through a slump, have, recovered. And, most of these companies are indicating better pricing power and margins improving. So that's another space where if there is some pullback, could be looked at, as well as, maybe the hospitals as well. But they're become a little bit pricey now. So you'll have to be selective there, or your, outlook has to be a little longer for you to generate returns.
Okay. All right, Mithun, thank you so much for joining in today with your take on the markets and specific sectors as well. We are talking about Laurus Labs, weak set of numbers. LT Foods, that's one stock I wanted to spot because that stock is down 12% right now. Reported numbers just a while back and is the third consecutive quarter of margin decline that the company has seen. It's come in at 10.8% versus 12.16% on a YY basis. LT Foods, that's the company that I'm talking about. It's a sharp knock on the stock that we have seen, and the internals do not look so good as well. We'll do one thing, we'll slip into a short break, and as always, we'll get you buy today, sell tomorrow calls from our technical experts. Stay tuned.
Sorry. Well, the markets woke up to negative cues this morning. With Brent crude prices higher, you had the US dollar as well that was stronger. And the 10-year yield in the United States as well had moved to the highest level we've seen in the last 3 months. So the global cues itself is a little bit subdued, and the Nifty ended in the red in today's trading session. We ended sub the 24,500 mark, though if you're looking for a bright spot, that came in for the Nifty Bank. That was up more than 300 points in today's trading session. The problem is there is a slowdown in consumption, as is evident from the commentary that's coming from a couple of these FMCG majors, Nestle as well as HUL. HUL's numbers were weak, and the commentary on urban India in particular was rather weak. And because of that, that stock was the biggest loser today. Nestle as well, the management has been sounding fairly cautious post its weak numbers, and that one as well was down more than 2%. The two-wheeler space, we had a hard knee-jerk reaction coming in from Bajaj Auto. And TVS Motors, after opening up in the green, posted its positive commentary in the con call. Well, it did sell off, and that one as well ended with a cut of more than 2%. The street, however, is willing to lend the long handle to the cement companies. The past quarter's numbers were disappointing. The first half of the year was a washout, but they believe the second half of the year will see a recovery. And that's why you did see some of these stocks that recovered considerably from the low point of the day. Mind you, all of them did report a weak set of numbers in the second quarter. There was a reaction to the deal as well that was announced on on Escorts Kubota's railway business. And Sona BMW, I'll do it in the next one. Welcome back. Well, the markets are sitting with a bit of a cut. The good news is sensex has moved into the green though as we speak. And as we have seen for many quarters, the street is positioned normally for Lal PathLabs numbers to be disappointing. And then you see a bit of a short covering bounce. Yet again, the absolute EBITDA number that had come in, well, it was disappointing. It missed the poll that we threw out. But the stock is seeing a bit of a bounce because the shorts are covering out. The commentary is going to be important. So we'll wait by for that. Well, Mitesh Thakur is back with us. Mitesh, not too much has changed from the last time we spoke, though I have to highlight that the breadth of the market actually now has moved in favor of the number of stocks that are declining. Your approach to trade, and also give us a couple of your picks.
So, Nigel, I think the good thing is that the Bank Nifty is strong and the Nifty has kind of, managed to stay afloat about 24,350. In fact, the low for the day, which is only for a few minutes, was 24,340. So I think I'm okay with that, which means that we are not shorting because we are around the support levels and slightly oversold as well. So maybe in a pullback, or if it breaks the support, then we'll look at it. For the time being, ICICI Pru Life, that's, I think, which is interesting me as a call for tomorrow. ICICI Pru is a BTST with a stop at about 759 and look for a target in the range of about 777 to about 780 on the upside for tomorrow. And the other stock which I have a call is a sell or STBT on ITC with a stop at 475.5 for targets of around 466.
Okay. All right. Thank you, Mitesh, for joining in with those BTST calls. Let's move on and talk about Dr. Lal PathLabs. That stock is under pressure. Remember, it reported numbers yesterday. There's a Nomura downgrade that has come in after that. In fact, management also pointed to increased competition in the industry. Vinny has all the details on this one. Vinny.
Yeah, so we are keeping an eye out on Dr. Lal. When you look at it, the numbers were largely in line with what the street was expecting. But let's not forget the stock has seen a run-up of around 30% in the last 6 months. And what they're highlighting is they want to expand furthermore in the lab network, which will lead to higher overhead expenses. Management has spoken about increase in terms of the competition that is there from the hospital front. Though irrational pricing, that has come down, but competition is still higher. And they're not looking at taking any price hike. So there will not be any pricing action that they will be looking to take. So the growth will only mainly be a volume-led growth for the company. Management also, there's been a change that is there, a big change, that is Dr. Om Manchand, who will be exiting the role that he's playing in the company as the director of the company, I beg your pardon, the MD of the company, and he will be stepping down. He's been a part of the company in almost 2 decades. So yes, that is something, that is an important change that is coming out over there, and that is why that bit of a jitteriness that we're seeing in the stock. Nomura downgraded the stock to a neutral rating. Target price is also something that they've cut, and they are saying that they do not see any value expansion furthermore. They're expecting that the volumes now for the company will be quite muted and stable, but not much of an exciting up move that they're expecting in terms of volumes, and that is why we're seeing a bit of a pressure for Dr. Lal.
Okay. All right. Thank you so much, Vinny, for joining in. So that is Dr. Lal PathLabs under pressure in today's trading session. But it doesn't get bigger than this. In a fireside chat between 2 big names at the NVIDIA AI Summit 2024, Reliance Industries CMD Mukesh Ambani and NVIDIA's Jensen Huang joked about the origin of NVIDIA's brand name and what NVIDIA means to India. Take a listen.
We are in what is the Geo World Center, which is new, which is built by my wife. So if I don't say it's built by my wife, I was instructed to say that.
I'm at her house? Her house is bigger than your house. And I thought your house was pretty big. Just so you know, from Mukesh's house, I could see my house in California.
So, and while I was listening to you, you talked about NVIDIA being an exotic place. And I was thinking that when you are in India, I've got to give you my version of what NVIDIA means to me. And I was just thinking about it backstage. There's a very important word link which is called Vidya, Vidya, right? And in Indian, in Hindi, as we are all determined to make the best LLM in Hindi, right? In Hindi, Vidya means knowledge.
I knew I named the company right. I knew it.
So
everybody said, NVIDIA, what a horrible name. You will never make it.
So what it means...
I knew it. I stuck with it.
So you can take credit for this interpretation.
Gosh.
No problem. Right?
And as we said, it doesn't get bigger than this, and you can tune into the entire conversation between Mukesh Ambani and NVIDIA's Jensen Huang at 6 p.m., 8:30 p.m. and 9:30 p.m. later today only on CNBC-TV18. Welcome back. You're still tuned into Closing Bell. Well, 34 points lower on the Nifty. There was some recovery that we saw on the sensex, but absolutely flat right now on that one. Bank Nifty is the one which is outperforming today. Has been a big mover. PSU banking names are lending support. Let's get in market expert Amrish Baliga joining us on the show now. Amrish, there have been a lot of earnings from the mid-cap space, but the one that we just got was, of course, from Laurus Labs. What do you make of this particular name? Continues to disappoint actually quarter after quarter, and the other pharma names as well, because we've seen some outperformance coming in from a few names.
Absolutely, but when you're talking of Laurus Labs, yes, I think it's been disappointing, just like the way Lupin is to disappoint in, about two to 3 years back. And they had the track record of the management coming in again, confirming that the future looks good. But then, quarter after quarter, you would still get disappointed. I think like Laurus is in a similar sort of a situation. And I doubt whether people will give too much of weightage to what the management says. But then if it turns out like Lupin, maybe after about 3 or 4 quarters, I don't know. But as of now, I would possibly just wait and watch.
All right, Amrish, I'm just throwing this at you. I don't know whether you track it, but Vishnu Chemicals, suddenly that stock is up 5%. And in this month, it is up more than 20%. It was a 500 rupee stock, went to 400. Now it's back at around 500. Do you track it?
Yeah, in fact, we had given we had a buy call on Vishnu Chemicals, and I think if I'm not wrong, the price target was about 520. It came, in fact, close to that today. So we are still holding on, and we are decently sure that it should cross that. Oh,
okay. There's a lot happening in the chemical space anyway, and now, as you said, there'll be commentary coming in from Laurus Labs, and Amrish, they do say they will continue to see some pricing pressure in their generic portfolio. So at least that's some commentary coming in from them. But other than that, Amrish, we have been speaking to a lot of these banking names as well. The earnings are coming in thick and fast. How did you make of the numbers so far this time around? Because earnings so far have been muted across sectors. But anything that stood out for you from the banking space?
No, banking space also, I expect, the numbers, not to be anything too great, could be slightly better than the rest of the numbers which we are seeing, which have been quite disappointing as such. But overall, banking, I see that the NIMs will continue to come down even going ahead. And I suppose the marketing costs, especially for the fixed deposits, I think the marketing costs are going to go up. The overall operational costs are going to go up. So margins would be under pressure, no doubt.
Got it. All right. Amrish, normally when you join us, you give us one stock idea. You want to do that today?
Yeah, the stock is Hindustan Zinc. It in fact came with earnings recently. India's largest and the only integrated producer of zinc, lead and silver recorded the highest ever second quarter and a half year numbers for mined and refined metal production. Q2 earnings were, I think, better than what most of the estimates were. EBITDA was up about 31%. Margins were the highest. The EBITDA margins at 50% was the highest till date. And the company clocked the lowest cost of production in the last 4 years, which in fact turned out to be $1,071 per metric ton. Silver segment now contributes about 40% of the overall profitability. And from the ESG and net zero commitment perspective, renewable power contributes about 70% of the total power requirement. Now, the new roaster will be commissioned by Q4, which will increase the refined metal capacity to about 1.2 million tons. About 510,000 tons of fertilizer plant would be commissioned within a year. That is about Q3 FY26. That should generate an EBITDA of another 450 to 500 crores more. So I'm expecting an EPS of about 31 for FY27 and a price target of 650, which actually works out to about 11x EV by EBITDA.
Taking that view, Amrish, thanks a lot. We'll keep a note on Hindustan Zinc. Wishing you a good evening ahead. By the way, that's the Market Movers Forum. We have Mr. Ramdev Agarwal, Mr. Navneet Munot, both of them in there, and our very own Prashant, Hormoz and Surbi as well out there. So we'll get to that in just a bit, to find out how are they viewing markets. Are we bracing for a bit of a time, price-wise correction? Well, time will tell on that note. So we'll go across in just a few minutes. I think for the time being, we can wrap down the markets. The Nifty is going to go home with a small cut, not too bad, 20-30 points cut. I'll tell you what, the bulls will take that. But there were many stocks that moved around today. The consumption slowdown, that was the big fear. HUL, it went into its numbers with a cut of close to around 10%. Well, it's down another 5-6% today. You have Nestle as well that is down close to around 3%. The other problem is the auto stocks. Bajaj Auto, TVS Motor, both of them were under pressure. If you're looking for some pocket to hide, then it could be cement, because you had Ultratech Cement, Thalmia Bharat, you had Grasim, all of them were higher in trade. But I think, Sonal, the good news was at least the Nifty Bank, well, out there, we ended with some green.
Oh, yes, that was the big support that we saw today. So markets, they end flattish. Nifty is down 21 points. We have the mid-cap index, which are under pressure as well. But Bank Nifty, as Nigel was pointing out, ends in the green, 335 points higher there. And we do have the support coming in from PSU banking space as well. The advanced decline ratio in favor of the declines today, 1,500 stocks on the declining side versus 915 stocks on the advancing side. Pharma was a big mover today on the back of earnings and management commentary. So you have the stocks like Pharma, Aster DM was the other one that did really well today. But Dr. Lal PathLabs, that was under pressure after some commentary coming in from the management and also a Nomura downgrade as well. But you know, we are talking about festivities and just ahead of Diwali, we do have a lot of moves coming in, and you spoke about the realty space, of course, 45% higher, that index so far from somewhat to somewhat. But today, that index was under pressure.
Well, indeed, you know, Sonal, from last Diwali to this Diwali, the Nifty as well is up more than 20-25%. And when I chat with our market experts, you know, on that forum that we're going to be having, CNBC-TV18 Market Movers Forum, I want to quiz them whether in the near term, from this Diwali to next one, will fixed assets be a better place to hide in, going by the kind of run, the kind of valuations that we're trading at, and going by those, you know, the earnings that we have got. But let's hop across. We're getting live visuals coming in from the CNBC-TV18 special Market Movers Forum. The guests are up for you on the screen. Let's tune into them.